Sears gets a lifeline that could help the American consumer, who our next guest says is doing remarkably well. For how long? Let's ask Troy Gayeski, Senior Portfolio Manager at SkyBridge Capital.
Hey, Liz. Well, look, for the time being, the consumer is doing great, right? Their personal financial conditions are in great shape. Debt service ratios are low. Financial obligation ratios are low. Obviously, the employment market is exceptionally strong. So, we think that the next leg down, the best indicator for the next recession, when that starts to change, is when business fixed investment starts to roll over, very similar to what it did in 2001. We don't think we're there yet. We do expect lower business fixed investment this year, but at some point in 2020, we start to see businesses start to get more conservative, start to liquidate inventory, worse job creation, and then you finally see unemployment start to tick up.
Troy, if our investors are listening right now and saying, tell me what signs to look for that trigger my itchy finger to bring some of my stock money back into cash.
Well, business fixed investment. So it's a data point that's put out quarterly. Yeah, and you can look at the trend. We do expect lower numbers this year than last year. Oil's lower, financial conditions are tighter, obviously lower growth overseas. But that's one you can follow, and that goes negative 2 quarters in a row. It signifies you're going to have worse labor market conditions going forward. That's one. The second would be if you think of looking forward to the Fed policy. So when the Fed first starts to cut, that is an indication that things have slowed enough that the economy is going to deteriorate.
You think they're going to cut?
No, not this year, but 2020 is definitely a possibility. And then the other would be when job creation slows to 75K to 100K a month. So that's really the crossover point where unemployment starts to go up and the consumer goes from being in great shape to just okay shape.